Okay. Okay. We're back with the electronic business. I want to thank Tom. I didn't know what he was going to talk about, but I found the ideas are very intriguing. And here you have a situation where the trend is defined in a completely different way from the way I look at it. But the basic idea is absolutely, in my opinion, in the right direction, that the trend is defined by the next time period up, RSI. Now, whether you choose to utilize that methodology, I don't know. But it's certainly worth investigating because the concept is valid. Also, the trend was established. The direction of the trade was established. A mechanical procedure for entry and exit is established. And this is exactly the sort of thing that I encourage and also try to teach and also I try to learn, because as we saw from the very first piece of paper I gave you this morning, when Richard Dennis says that he is a researcher, you better believe it. Because the day you believe you know everything about the market, that's the day the market is going to bury you. I'm speaking from experience. So any new information that comes in on the wavelength that's understandable to you and is logical, my request is please take it seriously if it is in the direction that you want to go in. And I think that Tom's concept here has validity, but also the last 3 points, don't keep jumping from method to method. Don't keep jumping from daily to intraday. Don't keep jumping from mechanical to fundamental. The market will eat your lunch. Please believe me. Okay. We're going to carry on with the high-low activator, which is a relatively simple concept that we were talking about before we went for lunch. And as I said, this is a simple moving average of the highs and the lows, but the way it handles in the Fibonacci trader, and we're going to see it. I'd just like to make a couple of small points about it, which I think is going to be a clarification, because there's been a little confusion, not a lot, but there's been a little confusion about how the high-low activator actually works. Okay. I'm just trying to rustle up some colored pens that will make it understandable what I'm talking about. Okay. The calculation is relatively simple. We have 3 bars. I will first talk a little bit about real time, and then we'll talk about how the end of day is adjusted. What the program does as far as the high-low, and it has obviously connotations, activator means activator. What in fact this does, and you will see it in the book and so on and so forth, it looks at, let us presume that this bar here is a live bar. In other words, let's say these are daily bars, and this is Monday, Tuesday, Wednesday. The day is not yet closed. What the program is doing, it's looking at this high, and this high, sums it up, divides by 3, okay, and makes a presumption that the market is closed at that moment. Tick by tick basis. Of course, the market is open. What in fact is happening is that if the market, in this case, is moving down, we will have a calculation that looks like this. The actual calculation itself is this high. I've drawn it not in the exact place so you can clearly see it. This high, and this high added together, divide by 3, but it is pulled back slightly below bar 3 because the question here was, why does Tom look at 3 isolated highs or isolated lows back? It is not a conversation for this 2-day workshop. The number 3 seems to be a universal number. I've studied ancient geometry going back many, many years, and this number 3 keeps on cropping up again and again and again. We can probably, if you have a free 4 or 5 hours, have a discussion. What is the effect of the wave, that if you stand at the shore and you watch the waves rolling in and out, the 3s and the 3 times 3s and the 3 times 3 times 3s seem to have a specific, somebody was mentioning this to me with 81 ticks. And again, it's the 3 times 3 times 3. And this seems to work in a very interesting way and easily manifests itself in the markets in a very visible way. I have tried 3s, 5s, 8s, 13s. I tend to work in Fibonacci numbers, which we will talk a little bit about. Let's just say and accept for the moment that 3s seems to work the best, irrespective, except for my experience. 5s are too slow, 2s are too fast, 3s seem to be able to manifest a situation that gives us the most timely information that's not too fast and not too slow. Okay, so this particular dot, in fact, is the high of Wednesday, which is the live bar, Tuesday and Monday. We draw it back a little bit, and the Fibonacci Trader program plots it slightly forward in real time. And this, when you're watching real time, is moving up and down all the time. In other words, it's constantly adjusting itself to the rhythm of the market. Any time period. I will just talk about the daily for the moment. But if you're watching 1-minute bars or even the ticks, exactly the same thing happens. And you will see when I start demoing various concepts, it has very interesting possibilities and results. Okay. So what happens is, as the market is rising, upwards, if it is destined to rise, this will rise up, but because it is a 3-period calculation, this period and this period, which is 2/3 of the actual calculation itself, is fixed. This can never change. We already know where Tuesday's high was, and we know where Monday's high was. So whilst this may be up and down by a couple of ticks during the trading, say you're coming into the last 20 minutes of trading, irrespective whether you're trading bonds, soybeans, wheat, IBM, whatever, I don't care, it doesn't matter, that if the prices close above it, and you will be able to see that on the Fibonacci Trader, the bottom right-hand corner, there is a what-if button that you press on that any time during the trading day. It gives you the scenario as if the market was closed at that instant. So you would know even 10, 20 minutes before the close. So if you want to get to your broker and you need 15 minutes to get to him, which of course is ridiculous, you should be able to get hold of him in 3 minutes. Or if you have direct floor access, of course you get hold of the guy in 30 seconds or even less. But let's forget about that. Let's say you need 10, 15 minutes. You will see that this is closing above it. Of course, the ticks and the prices are still coming in, but it will show you that the close is occurring above the high-low activator buy stop. And when we get into the rules, you will see the importance of this. What in fact happens is as follows. And when we do the computer work, you'll see exactly the situation. Let us presume that the prices do close above the high-low activator buy stop as is. Immediately, the program looks in real time at the low, and the low, adds the 3 together, divides by 3, okay, and gives us the buy stop, which would be the average of these 3. It's not down there, I'm just drawing it down there. And it projects it in such a way that automatically, when the next bar opens, which can be the daily bar or the 5-minute bar, and or the next day opens, say here, and this is now the live bar. The high-low activator now looks at the low of this bar, the low of this bar, the low of this bar. This is already null and void as far as the 3-period calculations are concerned. This comes right up here, and this is now the average of this, this, and this now becomes your sell stop. In other words, it takes out the thinking from you, where do I put my stop? This is number one. Of all the tools that are in the Fibonacci Trader program, this is the simplest and the easiest to use. And once you get to learn how to utilize this in own time period and next time period, and I don't care if you're going down to the 5-minute bars, I will show you 1-minute S&P bars. The concepts are identical. I believe Thomas showed you some 1-minute bars yesterday when he was utilizing some of the information that he's working with, where he combined own time period 1-minute dynamic trio, which is slightly more complicated than this, and I will show you how I utilize these two, which is the high-low activator and the dynamic trio, and it is a question of temperament, which one you want to use. This one, the high-low activator, is faster, but it is based purely on numbers. In other words, it is looking at the low, the low, the low, and the high, the high, the high, and that's it. The dynamic trio is a tool which I don't want to talk about just waving my arms around, but when I demo it on the computer, or I'll show you a few charts, you will realize the difference, and I'll put up both at the same time on the same charts, so you can see which is the preferable for you to use. The dynamic trio incorporates time. I don't want to go into any great depth at the moment. I will explain it to you. This is one of the proprietary indicators in the program. This is not. This is a simple moving average used in I think, a very clever way, and I think a terrific bit of programming has gone into it, because one reason that becomes very important here. Let us presume that during trading day, which is now Thursday here, the price proceeds on downwards, and this is a live bar, and the market is not yet closed. Okay, the market is not closed. The prices project down. When we have programmed it, and you can adjust it, by the way, that if it penetrates the high-low activator sell stop by 2 ticks, automatically the buy stop will come up, which will give you the moving average of this high, this high, this high, the real-time one over here. So let's say that, that, and that. So that's somewhere over there. Okay? That will come up automatically. Now, if, for whatever the reason, the prices come down here and they don't close below the high-low activator sell stop, but they come back up and the bar does this, but it closes up above it. What happens is that this disappears because it's null and void, it's not needed, and automatically it carries on. So this sell stop here was only penetrated by 2 ticks. This comes up as a buy stop above you. But if there is no close below it, this disappears and the trend run up is presumed to continue upwards. So what is the function? The function is that when this occurs, it comes up like a yellow traffic light. It's a warning signal. What I have found, and we can talk a little bit more about this, that irrespective of time periods we're trading, the closing price is the most important price of the hour, of the day, not of the minute or the 5 minutes, because that can be a little arbitrary. Those professional traders here know what I'm talking about. It has still validity, but from a different point of view. But the closing price of the day, of the week, of the month are certainly the most important as far as I'm concerned. That's why a lot of my calculations are based on the closes. There are many, many reasons for it, but generally there are a large number of players who are only day traders. At the end of the day, they throw in the towel. There are other traders who will not, and quite large traders, who will not hold a position over the weekend. Because when do you think presidents get shot? When do you think freezes start? When do you think boats sink? When do you think oil fires happen? Always on the weekend, when you can't take any action. So therefore, a lot of people, and I know quite a lot of traders, and some very big traders from huge corporations who are trading even stocks and shares, just won't hold a position over the weekend. Commissions are cheap, folks. It's much easier to pay the commission than to be on the wrong side of the market. And you can have a nice quiet weekend without driving yourself mad. Is President Ungo Bungo going to get shot in southern Congo, and your copper contract is going to go limit down and you can't get out for the next 45 years? And if you think that's a joke, only the 45 years is a joke, because something similar happened to certain markets in London where the copper, there was almost disaster with the nonsense that went on. So this is, I'm only showing this to you at the moment in one time period basis only. It's a wonderful, simple tool. Now, when we go to actually go through some of the trades and you say, well, does it actually work? This is the only true qualifier for our trading in the basic plan, real time or end of day. Now, the next question is, okay, Kraus, that's fine, very nice. What happens if I am trading end of day? And I don't want to watch this high-low jiggling up and down all day. That's fine. The program itself has, and I will show it to you, some of you, all of you got the program, already know, there's a little, you click on it and it says live on or live off. If you say live off, automatically what it will do, it will move this forward by one period. So because of the fact it moves this forward to the next day, and that's all it does. It just shoves it forward by one day. You put it into the next day's column. So if this is Thursday, you already know where Friday's sell stop is. And you can give this number to your broker before. In other words, it stops you from having to watch the market all day. And that bond plan, which I showed you the results for in the very first time, actually is done not on the real-time basis, but utilizing the end of day for 1997. That was not a real time. I never told you that, but I'm telling you that now. I didn't want to tell you because I wanted to tie it in with this particular concept. That end of day bond plan having this information available for the very next day. In other words, you don't have to watch the market all day. Of course, I don't want to kid you. If you're the person who can never get to your broker for one reason or another, all that is going to happen is going to make you go broker and broker. That's why they call them brokers. But that's not his fault that you can't get to him, except if his phone is engaged and the market is limit down and he's gone for a cup of tea that lasted for 4 days because he's gone to the Bahamas. That's another story altogether. The reality is that it is up to you. It's not the broker. It's up to you to watch your position, etc., etc. There are many books on the subject. I don't have time to go into it. You are responsible for your own money, for your own action in the market. Don't expect the broker to follow the market for you unless you have that specific kind of arrangement. But in order to trade this plan, even if it is the end of day, you must be able to phone and get the information yourself, even if you don't have a real-time program, to be able to say, where is the market? Actually, the truth is that if you really want to, you could do this concept by hand. I did this for years. But of course, I don't think anybody here really wants to do that. But you can, even if you have the end of the day program, and not just mine, many other programs, in the manual section, you can put in, you phone him up, what's been the high today? You can get hold of him. My suggestion is you phone him 15, 20 minutes before the close, once in the morning about 10 minutes before, after the open, excuse me, and around midday. But if you have no way of getting to him even once a day, you mustn't trade. You must not put your money and whatever you, unless you want to play with it, at risk. I do not have a concept or a system that needs so low maintenance, although I have one student in Chicago who's actually had a very big job in engineering. He trades the weekly bars, but I don't recommend this. This comes from years of experience. But if you're just trading in the normal way, you must be able to get to your broker. At least twice is the very minimum. And I recommend 3 times. Of course, if you have, and then you can adjust the program, what's been the high or the low, and you don't want to charge by hand. You just say, okay, this has been the high. And with the manual facility in the program, the moment you say, oh, this was the high at 10 in the morning, but now it's up here, you just plot it, and the program adjusts itself automatically to that. So the story of this is, this was the US bonds, which I showed you here, is in fact end of day basic swing trading plan, not real time. The real time, I will show you later on, had superior results to this, and so on and so forth. Okay, let us now go with the basic swing plan, and now you will see the reason why I went through the rigmarole of defining why did I go through the rigmarole of defining trend, trend change, and so on, and support and resistance? Because I incorporate the definitions to keep life simple and understandable. I incorporate the very definitions that we've been talking about. I don't know what's going on with that noise. Sounds like drunken cats running around. But that's par for the course for this place. Good. I incorporate our definitions into the rules, and I incorporate the rules into the trading plan. This makes life simpler and understandable. Otherwise, I can make such a complicated plan that you will go out of here and say after 2 days, absolute genius, didn't understand a wretched word. We don't want that. What I want is that at the end of 2 days you can say, yes, I learned 2 things which I can actually use in my trading. I'll be a happy camper. Okay. Right. Basic swing plan. I made it so simple that people have actually said to me, Krauss, this plan cannot work, until they saw the back test over a 10-year period and then changed their tune. I'll tell you privately without the camera on a couple of things about that later, but that's another story. In order to buy, there is only two qualifiers. Surprise, surprise. One is that the Gann swing chart must show an uptrend. In other words, we must have a solid line. What does that mean? This is the only two rules to buy with for the simplest long entry rule to buy with. The Gann swing must be solid. I told you in the program this is in green and it's solid, and we will go through this. On bar number A, it closes above the high-low activator in an uptrend, and there we go at this point A. And when I signify, it's like a crooked elbow arrow, that signifies a buy. One of the interesting things with this trading plan is not its simplicity. What is really interesting is we only act in this basic plan, be it end of day or real time, we only act with a trend. There is no contra-trend trading whatsoever. In the professional plan, yes, there is contra-trend trading. It's a different ballgame. Why? Because if you think you can use the identical rules to trade with the trend or contra-trend, you're dreaming. Once again, if you have such a plan, my checkbook is open, and Sean will back me up on that. His checkbook will be right along by him. I'm afraid to tell you that's the reality of life, that you cannot use the identical rules to buy with the trend or to buy contra-trend. In other words, if the trend was down and you're looking to buy, you have to use different rules. Different approach is required. You can't enter the market on the same basis. This basic plan only acts with a trend, so we don't have that problem at all. So therefore, we can utilize much simpler rules to enter and exit the market. What do we do to sell?
Does it have to do anything other than just close above it? Does it have to exceed the high-low activator by 2 ticks or more?
It says, qualifier. Number one, the chart must be in an uptrend, solid line. Number two, long entry buying, rule number one, in an uptrend. Bar must close above the high-low activator. In other words, this is a simple plan that acts when the price actually closes hourly, daily, weekly bar above the high-low activator. I don't even want to talk at the moment about intraday plans. Let's call this a daily IBM. Yes, sir.
When you say buy stop by 2 ticks there, or in this case, buy stop with a high-low activator indicator.
Okay.
Is that like a buy? Are you covering a short with that?
No, you're out of the market. You've been on holiday, Chuck. You've been on vacation. You come back and you want to look to enter the market. Okay? This is an actual buy stop. In other words, this is where you will be buying. It's a buying rule. Long entry into the market. You will wait for the close by 2 ticks. And how will you know that it is 2 ticks? Because it won't come up to the contra color unless it is 2 ticks. The program takes care of you. But there are other ways of doing this. There are certain other programs where you can do some kind of programming. Now, whether you'll get the same effect, I don't know, and that's not my business.
Robert,
Yes?
what do you consider a tick?
to stocks. I will talk about that. At the moment, the default is for everything 2 ticks in the program. But for instance, on IBM, I will put 3. On Intel, I will put 4. But it's always between 2 and 4. I don't need to give it more room in the market.
What is a tick? 16?
Well, what is a tick currently in the NYSE? It's a 16th. And in August, or sometime next year, we're going to go to a 10th. In Europe, it's already decimals. On all European stocks, there is no 16ths. The only country in the world, even in Australia, it's now trading in tenths, decimals. And we're going to decimals also. So once you go to decimals, you use your loaf. OK, 4 ticks or 3 ticks was what percentage? So if you go to decimals, you know it's much tighter. Therefore, the minimum I would go in decimals is 4 ticks once the decimals kick in. OK?
So it's different on the NASDAQ, for instance, where you trade 64ths or 32nds?
Yes, 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 yes. And also what you're going to find that you have to, I mean, a 32nd, OK, is what portion of a 16th? You just halve it or double it or quarter it. I'm going by the presumption of a 16th at, let's say, call it an average of 3 ticks. The default is 2 ticks, and it works reasonably well in 2 ticks. Sometimes you'll miss it, but not too often. So if you go to 64th, then of course it's got to be 4 ticks. If you're going, it's got to be 8 ticks. Exactly, exactly. So this is how you have to work it.
So that's adjustable within?
Oh yes, oh yes, oh yes. Otherwise, you know what? You can't. Yes, madam.
Saying that the close must be 2 ticks above the high-low activator.
Yes.
Signal a buy.
Yes, yes. But why you don't even have to think in those terms, although I tell you what's happening, that when it does close above it, like for instance here, it's closed above it, automatically the red sell stop will come up. If it's not 2 ticks, the red won't come up, and you can't take action. In other words, the program does the thinking to some degree for you. But that's exactly what's happening. Do you understand what I'm saying? Yes. Good. So in other words, if it only closes 1 tick above it, this guy will not come up, and you can't buy. By the way, this was we had a back test. Is Doug here? Maybe he's gone to sleep because he was Doug Shannon. 25 years backtrack, by the way, in the book on 5 different stocks, including all the major stocks. Not all, but 5 major stocks. I'm not talking about, you know, badly, thinly traded markets. We're talking about IBM, Eli Lilly, and so on and so forth, Philip Morris, etc. Okay. If you want to sell the product, exactly the same thing applies to in a downtrend. If you're going to sell it and enter the market on the short side, the trend has to be down. And the trend down is shown by only one thing, dashed lines. You can only sell it with this particular rule. And there's, believe it or not, there are only 3 rules in this whole trading plan. There are 3 rules. If this is too complicated, I don't know what to say.
Robert?
Yes, sir.
The note says bar A closes below the high and low activator in the uptrend.
Yeah, that's wrong. Please, that's just put down trend. That's a typo. Unfortunately, we live in a real world. And whilst there was every attempt to check it, there are 2 or 3 mistakes in the book. Even in the book, there are 2 or 3 mistakes. But, you know, easily recognizable. Okay, so those are the 2 rules that you enter the business with. To the downside, you can only sell. And if the trend is up, you can only buy.
Question?
Yes, sir.
If you're looking at the bottom graph downtrend,
Right?
the steps that are on top of the bars, would you call those the buy stops?
Yes.
And then
Yes, write it in. You can write it in. But that will only come up when you have a physical close on bar A at least 2 ticks below the sell stop. Otherwise, they will not appear. And those always appear at the top in green, and the bottom always appears in red. So the red is always your sell stop, and your green is always your buy stop. It's a fully automatic process, etc. And to those guys who are in the room, and there's a few of you, with symmetrics, this works very nicely with symmetrics